It's greetings, gentlemen and ladies. You are welcome to Tom FX social media handle. Yes, in this video, I want to give us this powerful strategy called the Rema. The Rema strategy. I want to give you the setups and also explain how it works. All right. But before then, in case you have not signed up for this our training, quickly create a derivative account using this training competition link here. This link, if you don't have it, request it on my DM. If you are just joining, if somebody has referred you to our free synthetic training group, so kindly request for this link because that is the training link for the whole thing. All right, so you are required to register a derivative account with this training link before you can be collected with what you are doing. All right, in case you don't have this derivative account, kindly request for this link so that you get your account created. Then if you have joined us and you have account previously before you get in connection with us, also let me know that on my DM or in the group, and also send us the registration email of that said account so that we also verify it and then do the needful. So in this video straightly, we want to give you the setups for this Rema strategy. Rema, people have been using it to cash out repeatedly in this in the context of this training, and they also want you to be a partaker of that, especially you that is outside the state. Then if you are within the state, you can also join us on our training every Friday and Saturday by 10 a.m. and 7 by 10 a.m. All right, so you can get my number below this video to confirm the venue of this training and the time of this training. All right, so the number is below. The registration link for the training, which I circled, is also below, so you can always get it below. The video guide is also below. Look at the video guide on how you can create the account. So the moment you receive the link, I want to send you a video guide that will guide you on how to do what, create the account. So okay, let us move straight to what we have today. Rema strategy. Rema strategy. All right, what is the Rema strategy? Rema is a trading strategy that comprises more than one indicator. All right, so I hope you have MT5 like this. All right, you have MT5 where you see your price movement. All right, so then the moment you open your MT5, come to chart like this. All right, so once you come to chart, click on this L, this Naira related symbol at the top. All right, this one at the top. So once you click on the N, all right, it will open up here. Some of you have some setups on their chart already. So if you have some setups on your chart, you will be seeing main chart, you will be seeing indicator window 1 or indicator window 2. But if you are just a completely beginner and you don't have any chart, then you also be seeing only main chart. All right, so in case you have indicator window 1 or 2 and you don't have a Rema and you also want to add it on your chart, so what you do, the moment you come here, kindly click on what, F plus on the main chart. F plus on the main chart, not on indicator window 1 yet. F plus on the main chart. So once you tap on it, you see some various kinds of indicators. All right, so you see other kinds of indicators. Then after that, you click on relative strength index. Relative strength index. All right, where is the relative strength index? If you check here, you see relative strength index. So just tap on it. Once it opens, and now the period, most of the time it will be on the default mode. Default, you are now the period to be 14. Allow the apply to close. Then you come here, this color here usually comes as a blue. That color here that is blue, change it to your background color. If your chart background is white, all right, you make it white. If it is black, just like my own, you make it black, but don't allow it to be on blue. Change it to your chart background color. Why? Because we don't want to see it. And then you drag, you see this thing can be dragged up, you drag it to the lowest, which is 1. After changing it to background, then you come up here where we have levels. Tap on this cycle, okay, the pencil. All right, immediately you will see 30 and 70. Remove the what, the 30. How do you remove it? You can just tap on this delete key. All right, if you click on this delete key like this, what do? you mark all. You mark all here, all right, and delete. If you delete it now, you can also then you go back, click on this plus, and allow put 50, only 50 like this, all right. Then color here, make it visible opposite your chart background. If your chart background is white, you make it black. If it is black, you make it white. Like my own chart background is black, I now make it white. Then you can drag this thing up to 3. From here you shift it to 3 or 4, all right. Then you go back with this arrow at the top. You go back with it and then click on save. Look at save here, all right. You see, the moment we add this RSI, we have main chart now, we have indicator window 1. So for you, some of you that have indicator window already, this one might be window 2, all right. So but now, because I don't have any setup on the chart, that's why I'm having window 1. I see it now. So now I have received window 1. Then to add the next indicators to it, then you'll be following the indicator window 1. If your own make provision for window 2, you'll be following the F plus on indicator window 2. So now my own is window 1. So I'm going to tap indicator window 1 to add other indicators. The next thing to add is envelope. I see an envelope. So the next thing to add is what? Envelope. So click on envelope. Look at the setup. You will see envelope on a default, but make sure you put this one 500. All right. This one 0. Deviation, very important, 200.100. Remove any number you see there and put the way it is here. All right. Then method should be simple. Apply to close. Then you come up a bit. If you come up, you will see upper band, make it red, and you drag it to the fourth side. Then lower band, you make it green and drag it to this extent. Then you click on save. Are you there? You click on save. Can you see it now? Good. So if you click on save, you now move up to the next one. How do you put the next one? You also go to the indicator window 1 or window 2 respectively, depending on what you have. Then and add moving average. You add what? Moving average. Look at moving average here. So on this moving average, tap on it. Just the default moving average is moving average 10, and now it's as 10. You can leave it simple or you put it exponential, depending. Both of them can work, but I leave my own exponential. Then allow it to be red. Then and increase the pixel the way it is. Increase it to the highest tick, and you click on save at the top. Okay. So now I'll click on save, and that is all I need in this setup. So if I go back now, if I go back a bit, let's check my chart. Are you seeing it? Look at what I have in my chart. So another thing very important before we continue. Okay, still on still. You can see our setups. If you come here now, it's raining. So now this is how our chart will look like. All right. Then if you come on your screen, just make sure first thing first, you have to click on this button to bring out your buy and sell. If you don't have it, if your buy and sell is not containing here, you have to click on this the rectangle to bring it. Let me click. I tap. You see my buy and sell has come on. All right. So then there is the next thing to do is to do your screen setting. What do I mean? You see this small arrow here. There is small arrow here. All right. This small arrow is meant for screen setting. If I soft press and hold, it will bring up a vertical line. You see this vertical line? Make sure that this vertical line is directly proportional to this arrow at the top. Look at this arrow. You see this arrow here? Your screen setting must be there. All right. You must make sure that that vertical line that comes the moment you press hold on this small arrow is lying vertically to that arrow at the top side. Do you understand? So just like my own, you see I placed it there, so you are now it. Then the second thing you do, or the third thing, shrink your chart to the lowest. When you go to the lowest, you now do 1, 2. Make sure it's on zoom 3 like this. All right, if you bring it down to the lowest, all right, you now zoom it in 1, 2. I seen it. So this is the size we want your chart to appear. All right, then the third thing is that this setup is being used in 5 minutes and 1 minute. So you put your chart in what? 5 minutes. Look at 5 minutes. All right, how do I mean? If you tap on, you can click on this M and put it M5. All right, M5. Or otherwise you tap and select M5. Are you seeing it for now? All right, so let us see other index. Let's start. I don't know the index you prefer most. And I'll show you why this market turns up and down. So what do you, in case of booms and crash? In case of boom, just like as I put boom 1000 now. See, when do you buy boom? You know boom sells by default and buys by as a spike. When do you buy boom? But before buying boom, the indicator will set. You see all this level. You have 80, we have 50, you have 20. I seen it. Then we have this red one, which is moving average. So the 80, 50, 20 is relative strength index. All right. Then we have, if you check up there, we also have this red background at the top. We have the green background below it. That is the envelope, the upper band and the lower band envelope. All right. Then we have this red, which is moving average. So there are the 3 set of indicators we have on this window. So then how do we know when to buy and when to sell? Because that is why we put this in. Then this strategy is best in catching spikes in boom and in catching spikes on crash, and also best in trading the trend depending on what you want. Okay, but me personally, I trade more of spikes. You can also use it to trade volatilities and rest of them. So how do you trade it on boom? For you to buy boom, you must make sure that this moving average, let me change the color. Okay, you must make sure that this moving average travel and touch the green what? Envelope below 20. That the moving average should travel all the way from up and touch the green envelope below. If it touches it, not when it comes closer, I say it must touch. If it touches it, the indication is that the price must move to the upside, just like the way it did here. If it touches the green envelope, which is oversold side, this is green envelope. You see where they touch, what happened? You see where they touch to the downside. All right, and price does what happened on the chart? Price went up. So let us scroll back and see another place that it touches. Okay, if you scroll back a bit, you see that though here where it's touch and scrape, this thing or this look at another place where it touched. So there was an uptrend move of the price on the chart to some extent, and then price started coming down again. So at every touch there must be, let us see where it's also touched successful. You see here it's touched here. What happened? Price went up on the chart. Okay, let's put another index. Let's say boom 500 and see. You see this boom 500 is planning to sell anytime soon because it has touched up, but we are waiting for something, and when that something comes, I also tell you what we are waiting for in the course of the whole thing. So you look at where it's touched below. Remember I said if it touched the lower side of the envelope, which is the green, what you have to do is to buy and hold, and the price will keep moving. Somebody will ask me, where will I exit? So we are coming to that side anytime soon. So let us see another place where it's touched. Look at where it touched. This one touched all the way from far, where to make that slight angle. All right. So look at where it's touched again. What happened? Price went very far on the chart. Okay. Look at where it touched again. This one started from far. Look at where it touched again, where to make that angle. All right. So this is the beginning of the other trend. Then what happened? Price went up far. Then this is the time to buy. So the time to buy is when the what? When the moving average, which is the red one, touches the green lower band of envelope, you buy, because what it signifies is that price has gotten to a verified support zone. Thereby, the price will move to the upside. So that's why you see that when they touch, price will move up. All right. So now, when do you sell? When do you sell? Though basically I don't sell with these tools, I don't sell, but you can also sell with it based on conditions. You can also sell. Remember, if it touches the lower side, you buy, right? Then if it touches the upper side, you also sell. But selling just like now. Good. Look at this market now. You see that this one is touching the upper side, meaning that this boom 600, very soon they will start selling until it get to the lower part again. All right. So that is the indication for sell. All right. That's the indication for selling. But if you are trading boom and crash, we don't encourage you to sell anything. Don't sell. Don't make sales on boom and crash most often. Catch the spikes is more profitable than the sell part. Okay. So if it touches the upper band, like the way it is now, it's time to sell. But this one requires some confirmations, which I also show you. Even the buy part requires what? Some confirmations, but I also show you in the course of this video. All right. Then just like here, you see as it touches up, what happened? Price went down on the chart. Let us check where it touches up most often. Make the angle up. You see it touches properly at the up here. What happened? Price went down even on the chart. Okay. But if you must sell, it touches up here all the way from far and makes so many patterns. You see it touch here. What happened? It went down. Price went down as well. But me personally, I buy more of. I don't normally sell, even though I know it will sell, but I normally do buy. Once you touch the green part, and then you buy, the price will went up. So remember I said this touching must touch in the 5-minute time frame. Compulsory. The touching should be on what? M5. All right. Then for you to, even when it touched to M5, you also needed to confirm something. If it's touched like this on M5, so you needed to go to 1 minute. You see 1 minute. It also responds based on those touchings on 1 minute, but the touching must be considered from 5 minutes. You see that this market still have a way to go in sell, because it's coming here below to touch and then spike the way it's touched here. All right. So even in 1 minute, the touching also gives you an effect. Look at where it touched. You see where it make that very angle. That is what is producing those long moves. All right. Let's see again. You see it touches here. You see spike. So every touch produce spike, whether 5 minutes or 1 minute. But trading this strategy, your own touching must be confirmed from what? 5 minutes. So once you confirm that it has touched the moving average, has touched the envelope on the 5 minutes time frame, you now come back to 1 minute like this and then check this reading. There is a reading here where we have 4109. If you check it, it's 05 now. It's counted down. It's 41 now. It's 40. I said it. 48 is counted down. We call it the RSI count. If it is boom 500, and you come here, maybe you have seen that the moving average has touched the envelope below on the M5, and you come to 1 minute like this, you notice that this count it has count down to 10. If it has count down to 10 as a boom 500 index, so you are permitted to buy. If it is boom 500, you watch the touching in the M5 and you come back and check this reading, you find out that is 10 or below 10, you can make your buy entry. But if it is 15 and this thing is touching in M5, don't buy yet. So get me again. I said this RSI reading, the moment you set your own beta, you'll be seeing this reading, this count that is going on here. This is 38 now, 38.94. All right. So if you receive your touching of moving average to envelope on your M5, then you now switch over to M1 like this to check what number do you see on this count. If it is 10, you can go ahead and buy immediately. But you must first of all confirm the touch before coming to check this number. If it is above 10, don't buy. Allow it to come down to 10. And buying at 10, that is if it is boom 500, if it is crash 500, if it is crash 1000, not even crash 1000. I said boom, what? 500, crash 500, what is that? Crash 600, boom 600. If that count is 10, you can buy. But first thing first, you must confirm the touching of the moving average on the 5 minute. You see, in 5 minutes is navigating to the downside. Are you seeing it? So there's no touch here yet, but I'm just giving instance. All right. Then if the number of the RSI is above, I want to see. Look at this one. You see this one? Let me put it better. Okay, it's normal. Okay, this one is also navigating to sell. I just wanted to see any market that is in alignment with what I'm saying. Okay, none for now. Okay, like this one now, good. You see this one is touching. It's touching. Are you seeing the touching now? And that is why it's moving up. It's moving up. You know, it just created a pattern. All right, it's touched for the first time, move up. Then get to this next line, it couldn't break it to come down. As it come down the same point, that's where it's also touched. It's now moving up. So now, this is 5 minutes time frame where I'm seeing this touching right away. So I'll go back to 1 minute. This is crash 900. I'll go back to 1 minute to check the RSI reading. You see that the RSI reading is far. Is highly far. You see, it's 44 point something, meaning that this sell has not finished. As it means it is 10, I'll comfortably buy on this touch. But buying it now is a risk. You can only scalp it and run away. It's not yet proper trend change. All right, because it has touched here on M5, but the reading of RSI is still high. It's 46. So 46 is, there's still an element of sell strength in them. All right. So that is why I will know what will happen there now. It will just sell like, it will just buy like this, the way it is. It will buy like this and spike down. Do you understand? That's what will happen. Just like this one. You see, this one couldn't move and spike down because the trend has not finished to the downside. So that is what we mean. Okay. So look at the crash. You know, crash sells by default. If you are trading crash now, that means each time moving average touches the upper side of the envelope, which is the red, you sell and you catch your spike. Are you seeing it? Are you seeing what happened on the crash? That each touch at the upper side brings a down shoot of a spike. Each touch at all on the upper side of the what? Upper side of the envelope will bring up a spike. You see this one now? That it's touched the upper band because it's a spike. You know, crash spikes down, while boom spikes up. So, okay, so you see that there was a touch to the upper band and there was a massive spike to the downside. Any touch at the upper side will bring what? Down shoot of the price. All right. Then and that same thing is applicable, that this touch must be confirmed in 5 minutes so that you catch a very long trend to the downside. You see the touch here, what happened? There are a massive fall of the price to the downside because this touching happens on M5. All right. So that is that. You can see the actions each time there was a touch to the upside. Look at here. It's not smooth, but there was a touch and price make some reaction to the downside, and so it continues. Then that same thing as a crash, you see that as it touches up and touch down, as it touched down, what happened? Price went up. So just follow the 5 minutes touch first. Follow the 5 minutes touch. Look at here. It touched the up. What happened? There was a smooth move of the price to the downside. Always just follow the touching. All right. So, and that is how this indicator works, which we call the Rema. Why do we call it Rema? The Rema, that is EREMA. Okay. So the R represents the relative strength index, the envelope, and the moving average. So that's why we call it Rema. It's highly effective. Okay, let us bring it to volatilities. How do you use it to trade volatilities? Those of you that trade volatilities, okay, how do you trade volatilities with it? Okay, let's check up on why and how we trade volatilities with it. Okay, so now if you must trade volatility with this, okay, let me put so many of you trade volatility 75. So you also follow the touching situation of the whole thing. All right. Each time that thing makes a touch under 5 minutes to the upside, then there will be a downside. But you know, in volatility, you consider chart patterns. It responds to chart patterns as well. You see here we have M, and the indicator also reached M and continue to the downside. All right. So what happened is that each time it's touched to the lower side, you see, do you see why I told you that volatility responds to chart patterns? You see, this one touch here, creating double bottom as well, and it went up. All right. So you see that those touches has effect. This one touch and move. This one touch and move straight up to the downside. Okay. So what do you do? Even in boom or crash, if you want to sell boom, the default, you see, look at touch here. What happened? There was a movement to the downside. So you can take advantage of all this move to the downside. What is your exit point? The moment they touch and they move, if this moving average touches the 50 level of what do we call it? 50 level of RSI, you can exit, or you hold till it touches 20 level of RSI, you can also exit. So these 2 points are your exit, your first TP and your second TP. All right, let us see another touch. Look at the down touch here. This one lie down from far. It started here. Look at where it started. All right, it's touched here. It created a kind of W pattern here that couldn't hold down. After range, it break and go. So, but there was a massive move to the upside after the touch. I seen it to the upside after the touch. I seen it. So if it also touches up, you also consider something. Now look at what you do here. You see here that there was a touch to the upside before the price moves to the downside. Then as it has touched, you can use your trend line from the previous uptrend and then draw, assuming, let me check this one. You can draw a trend line as the market is forming that's touched up. You can draw a trend line. If you see it's touching up and price move and break your trend line, then you know it's going to the downside. And that is why how to catch it on a sniper. You move. Let's say from this current market, let's see where market is or price is. You see this one is currently moving up. Why is it shooting up now currently? Because this thing just touched here, and that is why you see price moving up right away, and it's still moving. You see your first take profit has hit because the moving average is now touching 50. Then if they break All right, then you follow it till it touches 80. But what brings the upper move now is as a result of what? This touch. As a result of this touch here. So, and so it continues. So somebody that just traded from the touch, you also find out that you have taken advantage of the move to the upside. You see that before this one came down, it also created a pattern. That's why I told you volatilities respond to the patterns. And you see the leg line that was breaking below is where this one retects and is intended to continue up. Do you understand? So the touching has a very big effect on this so something. Just take it that each time it touches to the lower side, price must go up. If it touches to the upper side, price must go down. That is purely how it works. Look at here. Look at here, the touch. What happened? Price has narrated to the up. There are some touch that will touch and continue, but there are some smooth touch. Look at here. Price went down straight up. I seen it. So before this price went down, remember it was on the upside like this. Eh? There was an uptrend move and there was a break, and within that break there was a touch. So that's what will give you overview that there will be a massive move to the downside. You join the market. So it's very simple. So with this strategy you can trade anything at all. So if you just touch down, then you now have overview that the price will go up. You will now check other things, the break of structure to the up or to the down, depending. All right, so the touchings you see here, there was a move to the upside after the whole thing. So you can take advantage of all these things. So with Rema strategy, you cannot tell me you don't trade this, you don't trade that. It will trade everything. It depends on what you pay attention to. All right, the every crash it trades them. You see, this one it will continue to fall because price touches here and fall. Now it's gathering momentum. So if this one come back and touch again, it will continue to fall until it gets to the lower part. So somebody buying this is at risk because very soon now it is going to release a massive spike, causing this down move. They have the M pattern. I see it now. So that is how it works. So even in volatilities, as mentioned, this reading of RSI has effect in all. So each time, even outside this indicator, each time you see this thing count up to 90, this is 35, the one you are seeing now. If it get to 90 in almost any index, that means that's the price will start going down. If you get to 10, the reading, the price will start going up, even outside any other two. All right, between the testimony part of it, if it get to 1995, then it's a sure banker downside to the market. If it get to 10 or 5 or 0, that's 10 or 05, is a sure buy. The reading, you see, this one will start reacting to the upside very soon, because very soon it will touch here. So the moment it touches here, then you will see the effect to the downside, to the upside immediately, just like they have started even sensing the force. So you can make use of this thing effectively, especially the number reading, the number reading. So that is how to make use of this. If you have any question in respect to this, kindly drop it on the comment section or chat me through the number below this video or the link. Then I will answer your question on the DM or ask it in the group. Thank you very much and bye. Can you see this one we just took now? Can you see it? That one we took, as it touches here. Are you seeing the effect now? So you see it has moved. Are you seeing it? So why did we tweak it? Because we saw it that very time that it is touching. It's touching here. All right. I think there was the other one we saw that was touching 600 or 900. This one is also selling. Why? Because it's touching the upper side. So the only thing I will now look at now as a trader, remember you don't confirm market with this thing. I can add fractals on my main chart. What is fractals? Just click, go to main chart like this. Okay, scroll up to fractals. You see it? Tap on the fractals and click on save. That is all. You come back. So now you see I can use a trend line to spot this trend to the upside. All right, I can decide to use a trend line to spot it to the uptrend. Now I have seen the touch. I seen it. So what am I waiting for now? When this price will come and break this line, retest it, then I'll fire intercept to the downside because I've seen the touching. So meaning that this price will go down, but it needs to break a structure. We have a mini structure here. Okay, we also have the major trend here. So now, I'm waiting for the price. Is either if I want to take it very slight back, then I will allow this one, the minor structure to be broken, like here, where it lies this way. I will allow it to be breaking, just like now. It's already taking care of them. It's already breaking it, and we have a pattern here. So what pattern is that? You also provide your answer in the comment section. We have a mini pattern there, chart pattern, so which is also a bearish pattern. Okay, so if it is successfully break it, because price is just there, if you just successfully break it, then I'll wait for it to break the major zone, which is this. If it breaks it, then we fire in for sell, because the first confirmation is already taken here, and as simple as that. Do you get that now? So apply this. Let us see how it helps you. Okay, can you see that the spike happened on that line I just drawn now, because they couldn't break it successfully? So they are just doing some mini reactions to gather momentum for the break. You see, even after the touching, the consideration is to allow a proper break of structure, all right, to the downside. Okay, and that's what will give us overview to join the market, the trend to the downside, because definitely this one is going to move to the downside. But in order to get a very sniper entry, is to allow a structure to be broken to the downside, then you go in. As simple as that. Okay, though there's no you see this one, I show you that very. So can you see this one now? You see this one is moving up because what? It has touched the lower part of the envelope. All right, and it's to keep like that until to get up. Though this one touching is what, 1 minute. So you can also look at it here. See, this one is just a retracement to come and be selling here. So now I see crash one has touched. It has touched. What do? We sell and hold. But you know, you don't just sell. So you see this touching now is mandatorily going to go down to the downside because it's already touching. But the issue now is for how long. Now it's touching one confirmation. What is another confirmation? Is to check the RSI reading on the M1. Not that it's not going to spike, but we want the situation where we enter the one that will spike almost immediately. If you want to get it on a sniper entry, now it has touched. We'll now go back to M1. So this is M5 now. I'm going to check M1. All right, I hope it's reading. Yes. Then I'm going to check M1 to know the reading of the RSI. So now coming to M1, you see that this RSI is still at 72 point something. So even if this one spike, even if it is spike, there will be another possible move to the upside. Do you understand? There will be another possible move, just like the way it spikes here before. You know, this thing don't touch before. It is spike and do this journey, spike again, producing this journey. That's what will happen, because the reading has not gotten to a very bigger value like 90 or 95. As it being that we check here and is 95, then it's going to be a progressive spike and spike, just like, let me check where this thing happened, like here. You see here, look at what happened. This kind of trend, that's exactly what to produce. You see that this one has been touching all the way even from here, but price will drop and keep up, drop and keep up. You see, because those values waiting for those value. It was when the price get here, that was when that value, as it keep increasing, that is when it get to 90, 95 or 90 something, and then we have a massive drop to the downside. So the same thing want to repeat itself here. This one, you see, even if it drop, it's going to now create another trend inside the trend and continues, unless on the course of this move, this one or the figure gone up to 90 something, then we expect a massive drop to the downside. You know, market requires patience, and you must be patient at all time to get the right entry. So that's why we are clamoring about this number. Not that you can buy here. Another spike is coming shortly, but if it comes, we expect more upward move, because the number is still not enough to trigger the price completely down. That's what I mean. Okay, thank you. Let's be waiting and see what happens. Okay, look at another this thing. You see down, this one is touching now. I seen it. This is volatility 25. It has touched. All right, if we go back to 1 minute, we check the number is still 46. So meaning that even if it goes up, it's going to what? Go down again. Even in 1 minute, it's also touching. I seen it. So it forms this pattern. So the moment the completion of this pattern, it will fall again. All right, it will fall, and fall. But somebody, if you must trade it, then you must have to remember this volatility to draw a trend 9 from the previous from the trend. Okay, you can draw a trend 9 from the trend, then and allow this one to break and retest it. And by the time it is breaking and retest, this thing must have shoot curve this way. All right, if it doesn't make it that angle, that means it's not ready. So what will happen is that this market will go up, touch the trend line, and still fall, so that this value can get under 1 minute, can get up to 10 or 15 or thereabouts. You see, it's still 39, so it's high to make a sell there, to make a buy there. Understand? So it's high. So price that it is going to fall and fall up to 15 or 10 before you consider buy. So that little buy that is pretending now is not dependable. That's what I mean. Okay, you see that crash, you see how far it gone before it drops, and it still drop a higher high. All right, so that's why we said I wanted to show you the figure and it drops. All right, so that thing is going to it took time to drop, though it dropped where it's supposed to drop at the other previous high. You understand? But the price, it was 78 when I showed you. I just wanted to show you at 83. That's where it drops on the 1 minute. 83. Okay, so it makes this drop, and the drop is still what? A higher high drop. Okay, it's a higher high drop. So that is it.